Now, dimensional funds, one thing I like about them is that they really don't jump on every new idea that comes along. They're looking at what will stand over a long period of time and really looking at the fundamentals of each of the businesses and the companies that are within their funds. And that's a big thing that we preach here at Vanderwealth Management as well. And so that's why we've inserted a couple of their funds now into our growth portfolio. When it comes to the active models that we supervise, many of you have likely seen this, but we have a scale of 1 to 6, 6 being aggressive growth, pedal to the metal, one being more protection and more conservative. And so we have each of our portfolios based on the investor, based on your type of account, but assigned to one of our active models. Within each of these models, this gives you an idea of what percentage is going to be in that growth or stock portfolio and what's going to be in the income portfolio. And so, for example, with model one, we're going to have 60% into that income portfolio, where we've got more aversion to risk for that more conservative investor. And then as you slide down the scale or up to the Model 5 or the Model 6, you're going to see more exposure to the growth or the stock market portfolio. So we're always happy to dive into this in greater detail with each of you individually and one-on-one, but that gives you a general overview of what the differences are between the models 1 through 6, allocated between the income portfolio and the growth portfolio. And one thing that we'll find common with investors is we might have a Roth IRA or a longer term vehicle that is invested in the Model 5, and then a different account or an account that we plan on utilizing sooner in your timeline that's invested in the Model 2 portfolio. So there's great options here and something we've been very pleased with. Now, this here gives you an idea of our custom income notes. We now have invested close to 73 million into these types of investments at the time of this recording. And I want to share with you a little bit of the returns. Once the coupon or the dividend, the income payments, the cash coupons that come out on a monthly basis, we've received 90% of those payments. So you've probably heard me say before, that tells us two things: that number one, they happen with a high level of frequency, but number two, there are times when one of the underlying securities is outside of the buffer, and so it therefore does not pay that month. We've had an average annualized return over the 5 portfolios of 16.14%. And you can see our model 3, 4, and 5, they have higher annualized rates of return. They've taken on more risk within these income notes. And so that's to be expected. And then we have had 100% of the principal returned on these notes to date. And so very pleased with the performance of these. These are a huge part of our income and our Bander income portfolio.